Hi everyone, we are live now. Welcome to the show. My name is David Kosmider. I'm the creator of Timing Research, and this is our show for October 13th. Today we will be discussing the 55th weekly report for Timing Research, and if you haven't had a chance to look at it yet, you can go to TimingResearch.com/reports to download it. If you are new to Timing Research, we are building a crowdsourced sentiment indicator. Every week, I send out a quick 5-question survey to all subscribers, and to get everyone's thoughts about the upcoming market conditions, and then I compile that into the weekly report. So I have two guests with me today, Cameron Yost of DimensionTrader.com and Benjamin Lee of ThinkTradeThink.com. So, Cameron, let's start with you. If you could just tell everyone a little bit about yourself.
Yeah, hi, David. Glad to be here today. Benjamin, good to see you. Well, I go back a long time in the markets. Back in the late 70s, I had my Series 7, and I was trading as a broker and doing broker activities. I have spent, since then, probably investing in everything you can invest in through the markets. Equities, options, futures. Currently, my primary is day trading futures, which is just the index or indexes, primarily the S&P E-mini. Although I remain an active option trader as well. So between those two things, it's keeping me busy. And of course, I involved with DimensionTrader. DimensionTrader provides over 37 different indicators that they've written here at this point, and have put together two very dynamic trading systems that we'll talk more about later on, I assume. And using their software, I've been very pleasantly profitable. And so with that, that's a little bit about me.
All right, sounds good. Thanks for being here. Benjamin, if you'd like to tell us a little bit about yourself.
Sure, and again, thank you for having me on here. My name is Benjamin Lee, and I'm the founder of ThinkTradeThink. I've been trading for about 10 years now, and I focus a lot on a lot like Cameron here, the S&P E-minis, crude oil, options, Forex. I also do some syndicate, and I also trade for a couple of hedge funds. So I look at the market a little differently than most. I focus more on the auction process and actually understanding the fundamentals and seeing where buyers and sellers agree and disagree on price, and how that actually comes into play on an intraday basis or even on a longer-term basis. And obviously we'll talk about that a little bit later. And my main focus is on trading psychology. I've noticed that once you internalize your trading system, it really is 80% psychology and 20% mechanics and execution. So how do you bring forth the best version of yourself every single day? And I've created some proprietary systems to basically help every trader do that.
All right, sounds good. Thank you for being here as well. All right, let's get started with the report. I'm going to share my screen here, and I have activated the Q&A app for this Hangout. So if you have any questions, just type them in. Okay, so page 1 of the report always deals with the multiple choice questions, and so question 2 asks, based on any technical or fundamental indicators you want to use, would you guess that the S&P 500 index will move higher or lower next week, from Monday's open to Friday's close? So for this week, 50.8% of the respondents guessed higher, and 49.2% guessed lower. So almost dead even on that question. Cameron, let's start with you. What would your guess for this week be? Higher or lower?
Well, that's always, you're using the right word. Who knows what the markets are going to do? But I think we've got pretty firm. We've got some technical here. I look at a couple of things. One is obviously the technical ramifications, and the ES or the S&P. The S&P is right at its 200-day moving average. I think it's around 1905. And if that can hold, I think we're going to see potentially this week a bounce back up. Whether this is the end of the correction or we're going to come back down and test these areas and eventually break them, I think has yet to be seen. But if the 1905 can hold with the S&P, we may have a shot here of higher numbers this week. A lot of that's going to depend, I believe, on how earnings come in. We're moving right into earnings season now. We're going to have a lot of that coming on here this week. That's going to be critical, I think, for market direction. We don't have a lot of news in the front side of the week, but come third, well, we got retail sales on Wednesday. I don't think we have anything tomorrow, and today's a bank holiday here in the U.S. And Tuesday, it looks like a quiet day from a news standpoint. Wednesday, we got retail sales and also the producer price index, PPI, on Tuesday. Both of those are potentially market moving. Thursday, we've got the unemployment comes, and obviously that is significant, along with the Philly Fed manufacturing index. Friday, as far as the housing sector, we got building permits. We got some of the Fed folks speaking during the week. You never know what can come out of their mouth. Yellen is speaking on Friday. So, there's so many different factors that play into this. As far as the global political elements going on out there, we've got, if we get anything out of China, that's a weakening economy, it appears. We've got the euro issues going on in Europe, the economies in Europe. All of that plays. And, it was very interesting. I didn't realize until recently that about 44% of the revenue from the S&P 500 companies comes from Europe. And so if Europe weakens up, that can impact and will impact the top line revenues of our companies over here in the United States. 44% of the S&P 500 revenue. Yeah.
I didn't know that. That's an interesting statistic. Yeah.
So where do I think it's going to go? It's anybody's guess, but I think if the 1905 holds, I think we may see this creep up this week. If it breaks below the 1905, because I'm a technical guy, I think we could see continued weakness in the markets this week.
But you would say overall your prediction would be higher then?
Gut.
You had to pick one.
Don't trade on my gut ever. but
okay.
I wouldn't be surprised if it went up. I would be in the higher category if I had to pick for this week.
Okay. Thank you. And Benjamin, what would you say for the week?
Okay, just to take the opposite side, I figure we'll make it interesting. So Cameron chose higher. I'm going to choose lower, just to play devil's advocate here. It's interesting because until this morning, we saw a lot of price action move lower, and just by looking at price and volume, price is just an advertising mechanism. So all it does is really entice market participants to either enter or exit the market. So what's important is really value. Okay, so if sellers believe value is lower, right, they're willing to sell higher and buy back lower. Right? And if buyers think value is higher, they're willing to buy lower and sell higher. Right? So where are we value-wise? If you've ever heard of a volume composite chart, it basically shows how much volume is actually transacted at a particular price. And the reason why that's important is because the market's sole purpose is to facilitate trade. If you can understand that part, and you look at buyers and sellers, right, and when they transact business, they're going to go through certain price levels and they're going to agree and disagree on certain prices, right? So when they agree, you're going to see a lot more volume, right? And that's considered a high volume area. So when there's a lot of volume, that means buyers and sellers are willing to transact business at that place or at that level. When there's an unfair price or there's low volume, then buyers and sellers won't really transact as much business at those levels. And if the market is there to facilitate trade, once price hits an unfair price, it'll try to facilitate more trade by bringing it to a level where buyers and sellers agree on price. Okay, so on a longer-term volume composite chart, we're actually at a very important level. At the 1900 level, there's a very, very large low volume area. Right? So on Friday, we actually closed below that level, right? But now if you look at today's price action, we actually pushed a little bit lower, but now we're kind of hovering a little bit above that. So on a longer term level, that 1900 level is a very important level. In the intraday, actually 1900 again is a very important level, and it's another low volume area. So if we can close above 1900 today, there's a higher chance that we can actually close and continue higher. But if we close below 1900, then the probabilities of us closing lower and continuing lower are greater. Okay. And also, if you look at the longer-term charts, we have a lot of support and resistance right there. We have, what is that? Around May, we had a resistance level there, and around about early August, we also have some support there. So, that 1900 level is very important. And if we break 1900, I think the next level we'll go and test is 1864, because that's the highest volume area for the last year. So if we break 1900, there's a good possibility we retest 1864.
Okay, great. So your guess is lower for the week. So that's good. One of the comments I've received a lot on the show is that everyone agrees too much. So. But I mean, most of the people I have on are technical people who are looking at the same thing. So, but this is good. So, the next question is ask people to rate their confidence in their guess. So the average of all guesses this week was 6.492. The average for higher guesses was 6.129, and the average for all lower guesses was 6.867. So slightly bullish sentiment this week, but the lower guesses have a much higher confidence rating. So Cameron, let's start with you again. What would you what would you rate your confidence level at in
well, I got to say,
guess?
The responses from the survey, that's a typical bear, isn't it? You're just absolutely certain this puppy's going to go down, and it easily could. My confidence, we are right on this pivot point, as Benjamin pointed out. I am just on a 1 to 10. I'm gonna give, because I really don't want to be projecting. I know that's what we're trying to get to, but I'd have to go a 5.5. I'm just real slightly on my confidence level that we might go higher is very, very slight. Too many variables out there that can impact where this is trading. And let me throw in, as a day trader, I don't really care which way it goes, just as long as it's moving.
Mm-hmm.
So, with that said.
And Benjamin, what would you say for your confidence?
I'm going to go with a 7.
Okay.
7, but I think it'll be lower.
All right. Sounds good. Thank you. So the bottom of page 1 of the report shows the full history graphically of the predictions and confidence over the last 55 weeks. Page 2 of the report shows numerically the full history and results. And then page 3 starts with the open-ended questions. So Question 1 is always the same. What developing events, technical or fundamental, will you be watching out for next week, October 13th, 17th, that might have a positive or negative impact on the S&P 500 and other U.S. markets? So, Cameron, you mentioned some of, a bunch of events earlier.
Retail sales, unemployment, and building prices. That's the news coming out this week. Also, keep an eye out at earnings. Are those kind of coming in as if they're coming in strong? If there's a little surprise in those earning reports, I think that's going to impact it. So those are the primary events I'm looking for: is news and earnings.
Okay. And Benjamin, did you have any other events you were watching for this week?
Yeah. So the geopolitical events I'm looking at are obviously ISIS, Ukraine, and Hong Kong. Obviously, the situation in Hong Kong is very important because, again, how big of an issue is it can be with China? Right. So I think that could play a large role in the influence that it has on the U.S. markets. The other things that I'm kind of looking at are the Ebola issue. Again, when people have that kind of kind of that irrational fear. And if it starts kind of getting out of control, right now at least it's controlled. But if it gets to a point where it's starting to spread, I think that could really raise some issues in the markets as well. Then the other two pieces are oil prices, and then the end of QE3. I think QE3 is what's been kind of keeping the markets up for so long. We haven't had a correction in almost 20, 24 months, almost 2 years, where we actually had a significant correction. So, I'm looking for a significant correction once kind of QE3 is finished.
Okay. Thank you. And so let's move on to question 4. Question 4 of the survey is different each week. This week is, what advice would you give and/or what resources would you recommend to someone who is new to trading? So we got a lot of good feedback here. So if you download the report, you can read all of that. And let's start with Cameron again. What would you say to new traders?
Well, that's a whole universe of stuff, and I have to agree with Benjamin that so much of trading is psychology. And as a new trader, define your objectives very, very clearly. Of course, it's to make money, but how are you going to do that? Get good training. Find a mentor. Find an organization that provides good training with good history. That's my advice.
Okay. And Benjamin, what would you say to new traders?
Okay, so I'm going to break it up. I'm going to go from new traders, intermediate, and advanced traders. So for new traders, I would definitely suggest that they understand the why. What I mean by that is a lot of people, I mean, I did this as well. I went through 12 different trading systems to date, and the one thing I never got to till the end was understanding the why. So why did something work, right? You can look through so many different indicators, stochastics, what do you see, CI, Fibonacci retracements, extensions, Keltner channels, all these things. But if you don't understand why they work, it's very hard to look at the context of the market and apply that indicator within that context, right? Because the market's consistently changing. It's it's ever evolving. So if you can figure out why that indicator works well, what parameters make it work better, you can look for the specific context within the market so you can actually increase the effectiveness of those trades. For intermediate traders, I would say the best thing is probably to remove as much noise as possible, because I think a lot of people think the more you know, the more systems you can put together, the better it's going to be. But by the time you look at your charts and it looks like a 5-year-old just went crazy on your screens, you have too much information, And when that happens, your mind begins to shut down because you have that, analysis paralysis.
Yeah.
So if you can basically simplify as much as you can, right, and really look and see what works well for you, right? Are you a trend trader? Are you a counter trend trader? Do you work well, in a day time frame? Do you work better in a swing trading or long term? Figure out what works well for your personality, and focus on that. And for advanced traders, you just need to really work on your psychology. It's really the most important piece to be able to be consistently profitable every single day. If you don't understand and if you're not aware of those things that affect you in a positive and a negative way every single day, then it's very difficult for you to create a benchmark and to measure your progress as you move forward. So if you can really begin to become aware and to start focusing on those pieces, that's going to make you a much better trader.
Okay. Thank you. Paper trading is the first thing I tell people. If you can't, whatever kind of trading you want to do, get a good paper trading account, and if you can make money consistently there, you definitely won't with real money.
Mm-hmm.
That's fake.
Can I add something to that, David?
Sure. Yeah.
Okay, so whenever I'm working with newer clients, and that don't necessarily have as much experience trading, when they paper trade, I make them put something on the line, because the problem with paper trading is you can do whatever you want. You can enter, if you have a $10,000 account, in real money, but you're trading with $100 or $1 million, you can trade a lot differently, and it's not going to mirror what would actually happen if you're trading live. So if you have a $10,000 trading account, trade with $10,000 in your paper account. And when you have losses, put something on the line. In other words, if you lose, for every point you lose in the ES, put $1 in a jar for charity, or do some calisthenics. I make people do burpees. I hate those things. So I make others share my pain. For every point they lose, they have to do 10 burpees, and if they lose 5-10 points a day, it's going to hurt them in the morning.
Yeah.
And if I may, I agree with Benjamin. I think that's a great strategy, because the purpose of sim trading is to not only learn your technology, but you're also going to learn some psychology about yourself, and it's for you to start establishing trading habits, trading rules. I'm a rule-based guy. You need to have your rules spelled out, specifically a trading plan, not only why you take a trade, but your targets, your stops, and a strategy, and you stick to those rules. We are at DimensionTrader, and myself are very strong rule-based traders. Trade a strategy, trade a plan. And the problem with sim trading, Benjamin's absolutely correct, is that you have a tendency not to do that. Your emotions can get involved. You can find yourself revenge trading, or if you're making a lot of money, you don't stop when you hit your goal. You keep trading just because it's not real. But you can't allow yourself to do that with sim trading. You've got to follow your rules. And then if you become a disciplined trader and you find you have a good trading plan, good trade strategy, and you're disciplined, and you've got a history of consistently profitable sim trading, then you can move into live trading. But that's still, it's a totally different, as Benjamin I'm sure will attest, for the first time you put real money on a trade, no matter what your experiences have been sim trading, it's different when you start live trading. You have some very real moments start happening when you got money on the line.
Yeah. Yeah. All right. Well, thank you. Did either of you have any other comments you want to add before the end?
No.
All right.
Be careful.
All right. Well, that's about it for this week. I want to thank Cameron Yost of DimensionTrader.com and Benjamin Lee of ThinkTradeThink.com for being here. Also want to remind everyone to be sure to go to TimingResearch.com/current survey sometime this week before Sunday to fill out this week's survey. and thank you for being here. So
thank you. Appreciate it.
All right, thanks,
Thanks,
David.
guys.
Bye-bye, Benjamin.
Take care.